We're all familiar with the three whats: what it is, what it can do for me, and what does it cost. Tyler Riekena, Country Financial, can help you find the answers with insurance coverage to help protect what's most important to you, all at a price you can afford. So while you're juggling work and kids while trying to keep an eye on your financial future, Tyler Riekena, Country Financial will make sure they are the first ones there when you need them most. Many young parents leave pages of instructions for the sitter when they have their first date night after the baby is born. But only 36% of parents with minor children in the U.S. have any sort of plan to protect their children if they don't come back. Don't be part of that 64% without planning. At the Wilson Law Group, located in Madison, estate planning is all we do.
Fostering deeper relationships, influencing behavior change, developing resilience. You're about to start winning. Here is your host, Christine Bright.
Welcome to Parenting Game. I am so glad you are here. Today I am with Tyler Riekena with Country Financial. And today we're going to be talking about how to prioritize your financial goals. Now, keep in mind what we are sharing today is for information purposes only. So please consult a financial professional before you make any decisions. Tyler, thank you so much for joining me today. You are a financial professional here in Sun Prairie. So just share with us a little bit about your background, your family.
Sure, absolutely. Like you said, my name is Tyler Riekena. I work with Country Financial. I've got a beautiful wife, Courtney, who's here in the audience with us today. We live in Sun Prairie. I have two kids. Lily is 6 and Jordan is 4.5, and he'll be sure to tell you that he's 4.5, not just 4.
That's important.
Right. So we're active in the community. We've been here for, I want to say about 11 years now in Sun Prairie. So originally from Illinois. So I get a little grief for that sometimes, but I've lived here for about 17 years now.
Well, the important question is, are you a Packer fan or a Bears fan?
I will have to say that I am a Bears fan. I have to put it out there. I've got a little Brian Urlacher bobblehead on my desk just so my clients are aware of where I stand there.
Yeah,
so.
All right. Brave soul, brave soul.
Mm-hmm.
So tell us a little bit, too, about how you got into financial planning, how long you've been doing it.
Sure. It was an interesting path to get where I'm at. I was actually a restaurant owner for a number of years prior to changing gears. I went to school for finance, so that's kind of what my background lies in. The restaurant industry was interesting, to say the least. I learned a lot, but I just didn't feel the passion that I wanted to. Just wasn't a great fit. I looked at a number of insurance and financial firms, but I chose Country because of the breadth of offering that they do offer. We help clients on many levels, not just the home and auto insurance or just the financial planning piece. We kind of look at it holistically. It's a great company. It's been around for almost 100 years, A+ rated, and we can do a lot for our clients. So that's kind of what led me to that, and I've been with Country for about 8 years now.
Wonderful.
Yeah.
Well, we're going to be covering a lot of topics today. And one of the when I'm talking to parents and working with parents, of course, one of the biggest concerns financially, which we're going to dig into a little bit later, is funding college. But when I was reading through what you had sent me and your approach, I really liked your approach as far as that holistic view. We're not just, okay, you want to do college funding, we're just going to sit down and that's all that we're going to talk about. You really have a process that needs to happen before you get to that. And that's what we're going to be, sharing today. So I'm really excited, and you're on the front end of this. So you're probably have just a unique, when you meet with your clients, that, I'm on the front end of this too. Like, I'm starting to figure out what this is all going to look like for my family.
Absolutely.
So let's dig in a little bit. First, college planning, anything is saving. Is this an important piece? We know that in America, it's tending to be a little bit more of a struggle for individuals. So share with us some steps. How does this look Because, as you shared with me, we're not just going to jump into funding college. There's some other steps that need to take place first.
Absolutely. Saving for college is a priority for a lot of parents. As you mentioned, I'm right there on the front lines as well. We have 2 kids, so the conversations we have with clients aren't just hey, this is what people say. This is what I'm doing myself. And a lot of people take a lot of they appreciate that because they know it's coming from a good spot. Unfortunately, there's a study out that said about 64% of all parents feel that they will be financially responsible to help their kids with college. But out of that, about half don't feel that they'll have the resources to do so. So it's definitely a problem, I would say. It's definitely a concern that's out there and a gap that we're trying to help fill by partnering with families to help them achieve their goals. But it's definitely a high priority. And, quite honestly, years ago, having a college degree was, a leg up on the competition, so to speak. But it seems like nowadays it's almost a prerequisite in many career fields. So it's definitely a challenge. It's not a challenge that can't be done, but it does require some steps and some planning and some effort, and that's what we help clients with.
So looking at that, there's so many aspects to savings. So we got the college piece, we got the retirement piece. You're going to have the student loan piece maybe come into play. So again, we were saying we're not going to jump right into looking at funding college. So what should a family look at first to fund before that?
Correct. So there's some tips I guess I would give. First thing, before you kind of start any sort of savings goal that we generally recommend to people is establishing emergency funds. A rainy day fund, whatever you want to call it. You want to have about 3 to 6 months of monthly expenses set aside in a safe place, not under your mattress. Safe being, not tied to the market or something that might be subject to, some volatility, but in a checking account, a savings account, just in case those unforeseen things happen. If you need a new transmission in your car or your furnace, goes out. Those are things that you want to kind of address first before you really start filling other buckets, as we say. So that's usually step one.
Okay, and then after, we got that secured, which mine is actually labeled at the bank, emergency fund. And so I go to the bank, they look at they're like, you're a Dave Ramsey person. I'm like, yeah, I kind of am. So, yeah. But that just helps you be able to breathe and it doesn't derail you. What's step number 2? What are you going to look to fund next?
So generally speaking, our recommendation would be to focus on yourself. And I know can be a little counterintuitive because as parents, our focus shifts from me to they very quickly as they're born. So it might sound kind of off topic, but in order of priorities, and again, everybody's different, but we would encourage people to focus on their own finances first. So whether it be, paying off debt, if you have a high interest car payment or, you've got credit card debt, you want to kind of shore up those things first, because if you're paying, 16 to 18% on a loan, it doesn't make sense to ignore that and focus on funding for college. You kind of got to, focus on your bad debt first, we would say. And then after that is, your own retirement plan. Many people are fortunate enough to work at a job where they have a 401k or a 403b, such as my wife has. Same kind of thing, just through a different entity, so to speak. So focusing on that would generally be step number 2, at least to get your match with your employer. If you're not familiar with that, that's basically free money that your employer gives you. So, shoring up some base retirement savings for yourself is generally recommended for many reasons. One being that it can be flexible in that there are some opportunities that will allow you to use your own retirement savings to pay for college for your child. You can't help others until you help yourself. Kind of that rule kind of applies there as well. And I always tell people you can't get a loan for retirement, but you can get a loan for college.
Oh, I like that. Very wise words. So is there any other savings that should be funded before now we start looking at what the college planning piece is?
Sure, and that kind of depends on your priorities, right? But a lot of times, once we've got our emergency fund established and once we feel comfortable with our own retirement plan, the next step for a lot of people would be that college savings piece. And there's many different options you have. Some people just hear the word college savings and they gravitate towards, a 529 plan, which is one option of many. But that's really where you'd want to talk to a financial professional to kind of weigh those options. And there's pros and cons to anything. You might want to look for some flexibility in a product that some offer and some don't. But again, consulting with that professional can help get you pointed in the right direction.
Okay, so let's look at some of those options for college funding. You had mentioned the 529 is one way to do that. What other options are there if we don't want to go that route?
Sure. So a very basic option is a savings account. I would encourage all parents to consider opening a savings account for their child when they're very young, even a newborn. As a parent, you can open that account for your child. If you get money for their birthday or from grandma and grandpa, or if they, start a lemonade stand, even if you wait until there's, $25 or so to go make that deposit, establishing that account for them is just a nice place to start. And with a savings account, obviously there's really no risk, assuming, with all the rules with the bank. But, the only potential downside to that would be is if it is saving for a long-term goal, we generally recommend an investment product for a long-term goal because you can utilize growth potential. Now, there's risk in any investment. So, for a savings account, you're going to get little to no growth, which can be a little deterrent for a savings plan, but it's a great place to start because there's really no minimum, no contribution, commitment, et cetera.
Well, you bring up an interesting question. So if I take you off track, just let me know. You brought up that maybe instead of just setting it into a savings account, if you're starting, when they're really teeny tiny, putting it into a product. So parents can do that on behalf of their child, and then what happens when they turn 18? Can you delve into that piece a little bit?
Sure. So can't get super specific. Again, you'd want to talk to a professional about it. But high level, a 529 plan is a state-sponsored plan that allows for some tax benefits, state income tax deduction on the contributions. But the parent or guardian would essentially open that account, and the child would be the beneficiary. And it would be earmarked for higher education expenses. So it allows you to set aside money that would have market risk if you choose to, which most do, and it would allow some growth potential, for the 15 or 18 years that you have until that child becomes of college age. And then ideally it's used for higher education expenses such as, books, room and board, tuition. They've gotten a little bit more flexible with it as far as what constitutes higher education, but it is pretty specific in that those funds would need to be used for higher education expenses. Otherwise, you kind of end up losing the tax benefits you got on the front end.
Okay, so then now this brings up the question, what is there a time limit on that? If my child decides I'm going to take a year off or 2 years, I'm not sure what I'm going to do, is there a time limit on when this money needs to be used by, or as long as it stays in there, it just has to be used for? Sure.
So there is a timeline, and I don't want to get too into specifics, but you want to talk to a professional. But it does have some flexibility. It doesn't have to all be used when they're 18, for example. And you also have the ability to essentially transfer that to younger siblings or even nephews or nieces. Now, most of us aren't fortunate enough to offer to pay for our nephew's college, but you can kind of pass that down the line, and effectively a person could have one account and then use it for child 1, 2, 3, et cetera. So there is some flexibility there.
And then again, too, I know we're being careful with the information that we're putting out there. So let me know if this is something you don't want to delve into. But what happens if you've been saving and then the child goes, I'm not going to do school?
Sure. So it is. Every state has specific rules on the tax benefits, but high level, you would essentially retroactively lose those benefits, and there may be some penalties involved too.
Okay.
So it's great if it's used for what it's supposed to be used for. Of course, we never know what the future holds, so that is a con, I would say, I guess, because if it doesn't end up using for that, you do kind of lose the benefit that you got.
Okay. And then you shared some other I thought, creative ways to, fund college besides that. Can you share some of those?
Yeah, one very popular option that we utilize, and Courtney and I have actually used this for our children, is a cash value life insurance policy. So it seems off topic, but I can assure you that it's not. A cash value life insurance policy, which we'll talk about in the next segment in detail, does allow for tax deferred growth inside of that plan that can be used for any reason whatsoever. It can be used for college, it can be used for, first car, down payment on your first house. I actually use my policy to help get an SBA loan to start my restaurant. So something that I used as an adult even, and there's no time limit on that either.
And then I also liked this idea of, you said to ask relatives and do some gifting.
Yep.
So get a little bit more into that.
Sure.
I really like that.
We call it recruiting help, if you will, but grandma and grandpa, if grandma and grandpa are around and they have the financial means, are often really good people to ask. It may be an awkward conversation depending on your relationship and how finances are handled within a family, but grandparents love to spoil their grandkids, and a lot of times you get toys, right?
Stuff.
Yeah.
Much more stuff.
Yep, and kids can only use so many toys, and I can't tell you how many times that toy gets used once or twice, and then we end up selling it on Craigslist or at a garage sale for pennies on the dollar. If you were to tell them, hey, we appreciate everything you do, but our goal is to help them with college. And using my own experience, my parents, I did have a student loan, but they helped me with it. And I think if they think back to that and say, well, we don't want you to have to do that too, they may be inclined to say, sure, we can do $50 a month or $100 a month, depending on their financial situation. If you can get that kind of commitment out of them, you can take that to your financial professional and say, hey, I have, grandma and grandpa have committed to $100 a month. What can you do with that? And they can, explore those options that we talked about and potentially start something right there.
That's great. Wish I would have thought of that. Also share with us what happens, there's definitely times where kids get scholarships. And now you've earmarked that money. Is there any space or forgiveness then with, okay, my kid's got a scholarship, I have this money that I need to use for education, but obviously now can't use it? Or does that just fall into what you covered earlier? It's kind of like, well, you did a good job planning and,
Right, same rules apply. I mean, that would obviously be a great benefit if the child did get a scholarship, but that kind of, as far as the products go, it's no different than them deciding not to go to college or going to a university that didn't cost as much as they thought. So we do really want to be careful with that. And again, we look at all options.
Yeah.
My recommendation is generally to look at multi-use products so that if that is a concern, if your kid is going to be the next LeBron James and you're not going to have to worry about paying for school, maybe you focus your resources and your attention on one of those other savings vehicles that allows some flexibility. Scholarships are a great thing, and then there's not just athletic, there's educational scholarship, art scholarships, et cetera. So we definitely encourage people to explore that, contact their target schools, if you will. Like if you really have your sights set on a certain school, reach out to them a couple years ahead and ask what kind of scholarship programs they have available so that you can kind of prepare for that and hopefully plan for it.
And the other piece of advice that you gave, your kids can work
Yeah.
to help pay for college. Have them put a little skin in the game as well. Do some planning with them. Say, hey, get a job, work, and put a portion of this away towards your college education. And I think sometimes as parents, we just want the best for our kids, and we end up taking on more than we should, or miss an opportunity to include them, in planning for their future.
Yeah.
So share with us, so you have all these avenues, these options. So a parent comes to you and is like, here I am. I want to start planning. What does that first appointment look like? Kind of what steps do you take when somebody comes to you and says, all right, I'm ready to do this?
Sure, and that's very common. I can't tell you how many times people come in and say, I want to set up a 529 plan, or I want to do this. And we kind of say, pump the brakes. Let's see where you're at with things. Not to liken ourselves to doctors, because what they do is fantastic. But you don't walk into a doctor's office and say, I want this prescription because I saw it on TV and it sounds great. They're going to say, whoa, what's going on here? So, any financial professional will do their due diligence, and there's some suitability questions. We want to operate in a fiduciary manner, meaning that we're going to give you the best possible advice for your specific situation. And that's the thing, is every situation is different. So many of our clients come in because their brother and sister are doing this for their kids, or their friend at work told them to do this. They may be in an entirely different financial situation, so it's not always appropriate just to do what your friend's doing because you heard it's great. So a lot of the things, granted we're on TV and radio here too, but a lot of the general advice you hear doesn't apply to everybody, and that's why it's so important to talk to somebody on an individual level. But to answer your question, first we just do some fact finding. Hey, tell me what your goals are. What are you trying to accomplish? Ask some general questions about their financial situation, because certain products, the benefits aren't available to everybody depending on your income bracket. Good problem to have, but if you make a certain amount of money, some tax benefits are off the table in certain products. So those are important things to run by your professional. And then just analyze the situation. How old is the child? How much time do we have? Because your time horizon is a very important thing when you're looking at investment options. How much time you have until you reach your goal. Got
it. And then is there ever like a too late scenario? Should parents ever be like, it's just too late for me to do any type of financial planning, whether it be college or I just feel like I'm not, on the right track. Is there ever a time where you just go, you know what, I've missed the boat? Or is there always opportunity to come in and help get the wheels back on? Or
sooner is always better. Again, time horizon, time's our best friend. The more time we have to reach a goal, the more volatility can play in our favor and not be a hurdle. But it's never too late. There's always something we can do. There's always the future, right? So sometimes it gets tough when we can all tell that they should have done this a long time ago. But there's no time to start like the present, and there's always something that can be made, whether it be, just figuring out your current debt situation and consolidating that. Maybe that can help you, or just starting something, whether it's $50 a month or $1 a day even, can have benefits over time.
So I love that. So is there any limits on what somebody can come in and talk to you about, or if it has to do with finances, they can come see you and get advice and help on how to figure out how to move forward?
Sure. I would talk to anybody. We utilize a team approach at Country. I can't do everything. We have such a wide variety of services. I like to be as knowledgeable as I can in all the areas, but we use our whole team. If it's a financial planning situation where we're presenting them with their financial plan, we'll bring in our planning team. All they do all day, every day is crank out retirement plans. Obviously, it's my input's important because I know the client and I know what their goals are. But we utilize all those resources to give as much advice and guidance as we can. That being said, we do partner with other professionals that are outside of our scope. For example, we're not tax professionals. We partner with CPAs in the community, and if it's something that they need to handle, we'll refer that out. A lot of times we work with attorneys, for estate planning purposes. That's a very important thing that all parents should consider.
Actually, we just did an episode on that.
Fantastic.
For young parents, you think it's a senior, this is what I do in my twilight years. And we had just a really great information on that nope, when you're young and you have those kiddos, that's something that you need to start looking into. So I'm glad you brought that up.
Yep. So, those are all resources that we utilize to give people that holistic approach. It's not all done by us, but we like to be a facilitator. I like to be a connector on as many levels as I can. We have partners that are realtors, that are mortgage lenders. If we'll come in and see people, we'll be talking about their home insurance, and I'll ask them, I see that your mortgage is through this company. What's your interest rate? Well, I don't know. When was the last time you financed? Well, a couple years ago. All right, you need to go talk to your bank of choice. And if you don't have somebody, we usually have a few recommendations we can give. So we really do try to support clients on all levels, which I think does separate us quite a bit from, the other insurance companies or the other advising firms, as we try to really give people all they need in one spot.
Oh, that's wonderful. So just kind of give us an overview. We got a few more minutes here. So just what does Countrywide all offer as far as your products and services? Because I love that you partner with other people, that you're not doing that. But what do you guys all do? Is it life insurance, car insurance? Just kind of give us a quick elevator overview of.
So we are an insurance and financial services company. So we do, the basics. We do home auto insurance. We do renter's insurance, which is often overlooked but super important.
I have renters. I've had friends who have lost everything, and they're just like, my landlord's going to pay for it.
Not the case.
Not the case at all.
And that's so cheap. I mean, renter's insurance is like $10 a month.
Ridiculous.
So we do that. We do small business insurance. Being a business owner and a restaurant owner in the past, I love working with business owners because they're so busy and they really want to develop a relationship with somebody that can help them on as many levels as possible. And so I love that connection. We're a top-rated life insurance company, which is something I'm very passionate about because being in the industry for as long as I have many clients that have passed away way before we ever thought. So I've seen it in real time, and I've seen the impact of proper planning, and unfortunately I've seen situations where proper planning wasn't in place. So our life insurance services are very important. And then
we'll be doing a whole episode on that.
Correct. Yep. So stay tuned. And then the whole financial planning piece is a big aspect that we offer that a lot of companies don't. So whether it be, college savings plans, or, what's a Roth IRA? How do I start one? Or I have this plan through work. Am I saving enough? When can I retire? All those are great questions, and people come to us on many different avenues. Just depends on what they're looking for.
That sounds great. And then how long have you had your office in the Sun Prairie community?
8 years.
Nice. You guys have been established here for a while. And then you said Countrywide, or Country Financial itself has been around.
About 96 years, I think.
Yeah, so we can have confidence in what they're offering. Well, I thank you for your time today and all this information. And I, again, want to let you know this was for information purposes. Please reach out to a financial professional before you make any decisions. And remember, time invested in a child is never wasted.
We're all familiar with the 3 whats: what it is, what it can do for me, and what does it cost. Tyler Riekena, Country Financial, can help you find the answers with insurance coverage to help protect what's most important to you, all at a price you can afford. So while you're juggling work and kids while trying to keep an eye on your financial future, Tyler Riekena, Country Financial, will make sure they are the first ones there when you need them most. Many young parents leave pages of instructions for the sitter when they have their first date night after the baby is born. But only 36% of parents with minor children in the U.S. have any sort of plan to protect their children if they don't come back. Don't be part of that 64% without planning. At the Wilson Law Group, located in Madison, estate planning is all we do.
Thank you for watching The Parenting Game. All episodes of The Parenting Game are available on demand at sunprairiemediacenter.com.